Hi folks, it's Friday afternoon and welcome. This is Real Estate with RE/MAX. I'm Lance Hansen with Almaskaljic here, and we are going to talk about some interesting things this afternoon. I don't know if any of you out there have thought, but there's been a whole group of people who in the last year or so, all of our credit score requirements and things on loans have had to go up. And it kind of shut some people off. A lot of people that were out there and interested in buying homes and in the market. And we've got a guest today. Steve Schraderbacher from Wells Fargo Home Mortgage is here to talk about some FHA guideline changes. And it's going to help out those of you that have a ding or two on your credit. Maybe not enough credit established yet, so it's under the 600 mark that everybody always puts out there as such a big deal, and has shut all those folks out of the market. So we're going to talk today about that, along with some other things. So if you'll just join us back here in a couple of minutes, we'll get started. Thanks.
From the RE/MAX Real Estate Concept Studios, listen, watch, chat. This is Webcast 1 Live. Programs on webcast1live.com are brought to you in part by KDC Builders, building custom homes for how you live. KDC will take your dreams and turn them into reality. Go to our website, kdcbuilt.com, or call Hannah Inman at 515-975-9990. And Tom Coates and ConsumerCreditOfAmerica.com. Are you overwhelmed with mounted credit card debt and feel there's no way out? Well, there is. Call 1-800-955-5765 for Consumer Credit of America. That's ccofamerica.com.
Hey, thanks. We're back. I'm Lance Hansen. This is Almaskaljic, and this is Real Estate with RE/MAX. We're on every Friday afternoon from 1:30 to 2:30, distilling down all that national news and information and talking to you about what does that mean? What's it mean to you? In our area, in the greater Des Moines metro area. And for some of those that are out there that are not in the greater Des Moines area, I know every once in a while we have Ron from Atlanta tunes in. Atlantis? Did I say Atlantis? Yeah, from Atlanta, Georgia, tunes in and visits along with us. So Ron, if you're out there, shout out to you. Ron is a loan originator down in Atlanta, so we get to have discussions every once in a while and talk about his world versus our world. They're actually quite similar. The young man that I'm talking to here is Steve Schraderbacher, and he is with Wells Fargo Home Mortgage and has joined us today. We're going to talk about a new set of guidelines that FHA has put out that will help some of those people that, for whatever reason, whether they stumbled, they haven't had enough time, whatever it is, you've got a loan program through FHA to help them out.
Right.
So Steve, welcome. When I called you the other day, I said, we haven't had our dose of Steve on. Haven't had our dose of Steve for a while, and so after much complaining from Alma that you hadn't been on, I finally gave in and called and said, because every week she's like, isn't Steve on this week? No, isn't Steve on this week?
He has something intelligent to say. So I just, I'm like,
should I take that personally? Or I'm not sure. I'm like, wow, okay, that was nice.
No, I never meant anything.
I see. Yeah, no. I'm sure. Okay, so anyway, you're going to visit with Steve about this program and talk about that. And you have to get somewhere close to your mic so people can actually hear the intelligent things that are being said. So I'm sorry.
Here we go.
I'm just messing.
Okay.
Anyway, so visit with Steve a little bit about some of this stuff, because I know you've been reading up on it.
I have. Steve, So, FHA,
Yes.
new changes, a lot of changes.
Yes. A lot of good changes.
A lot of good changes, yes.
So basically, just to give everybody an overview, the traditional FHA guidelines stated that in order to purchase a home, you had to have a credit score of at least 600 as of or prior to last Saturday. Last Saturday, Wells Fargo has opened up an opportunity for folks below 600 all the way down to as low as 500 credit score to potentially purchase a home. This doesn't work for refinances, it's purchases only. Refinances are still 600 minimum credit score. But if they're looking to buy a home and they have some credit challenges, we can look at opportunities potentially to allow them financing when their score is below 600.
So you said Wells Fargo. This is strictly just Wells Fargo.
Well, that's what I'm hearing because I'm getting a lot of conversations from other folks that are not, other competitors that are not utilizing this program.
But it's an FHA.
It is an FHA program, correct? Yeah. And I don't know what the situations behind the other lenders, but certainly we have a good amount of business that we run nationally as an FHA lender. So I just think it certainly gives us an extra opportunity to help clients in need.
Well, let's go over from the top.
Sure.
Because there's some basic guidelines. So run through the basic guidelines.
Sure, okay.
And then we'll just kind of dissect those as they go along.
You bet.
Just jump in anytime.
So at 600 or better, the minimum FHA down payment requirement is 3.5% of the purchase price. 3.5% there. When you get below 600, for a credit score at 580 to 599, you have to have a minimum of 5% down payment. And then when you go from 579 all the way down to 500, you have to have a minimum of 10% down payment. Now, the other difference is at a score at 600 or higher, that 3.5% can be gift funds. At a score below 600, the 5% or the 10% cannot be gift funds. So it has to be your own money invested into that opportunity. Let's see, what else can I do? I mean, there's some ratio guidelines, some different, a little bit tighter qualification opportunities there, but those are the highlights of the program. One other thing too is currently FHA allows up to 6% of the purchase price to be in seller paid concessions for closing costs, prepaids, those sorts of things for 600 or higher. When you get below 600, that is reduced then to only 3%. So again, that's just kind of a high-level overview of everything. We certainly can talk about different scenarios for that, a situation. Best to reach out, and I'd be happy to answer any questions about that.
Okay. The idea behind this, do they have they shared a philosophy of why they made these changes? Is there like, this is our
No, not really any official commentary on that. I guess certainly with the mortgage market as a whole reducing in size this year over last year, because last year we were very blessed. We had a lot of refinance activities. A lot of rates stayed substantially low for a majority of the year. Certainly rates have ticked up since that point. A lot of the refinance opportunities have gone away. And so I think a lot of that has to do with investors' desire to still have mortgages to purchase and a good supply of mortgages. And so they've allowed us to look at that opportunity, and certainly trying to help homeowners that may have had some concerns in the past and are really trying to get better, to get credits up to standard, but are not quite yet to that 600 point and still want to have an opportunity to take advantage of the lower credit scores.
Okay. When you do this, what other changes? I mean, when you go down below the 600, now you as a blanket, you have to have your own funds for down payment, whether it be 5% or 10%.
Correct.
Okay.
And there's the ratios, the debt to income ratios are tighter. Depending on your situation, FHA normally does not have a requirement for reserves, when your reserves being money that's left over after the down payment. when your score is 600 or higher, FHA says you don't have to have reserves necessarily. When you get below 600 in certain circumstances, you have to show at least 2 months worth of reserves. And by reserves, again, I'm talking about money after the down payment. And by 2 months, I mean 2 months of the payment, principal, interest, taxes, and insurance minimum available after the down payment is taken out.
Okay. Those reserves you said can be gifted.
Correct. That is correct.
So
yes.
they can get a gift for a certain amount of money.
For the reserves only.
Okay.
Yes. And again, it would just have to depend on this particular situation. We just have to run everything through and verify what the debt to income ratio is and if they need to have the reserves or not. Because there are some, it's not required on all loans below 6 or all credit scores below 600, just in certain circumstances. The reserves.
The reserves aren't required on all of them below?
I don't believe so.
Okay.
I'm pretty sure
All right.
that's the question. It depends on how the system grades the transaction. So, for instance, we call what we have an accept transaction or a refer transaction, and a refer transaction has a, not trying to get too technical here, but a refer transaction has a lower debt to income ratio and then also has the reserves. Whereas an accept will allow a little bit of a higher debt to income ratio and not have the reserve requirement.
And the accept refer is a set of guidelines that you input.
It's right. The system will generate if the loan is an accept versus a refer on the decision engine. Okay. So it just really depends on how the certain circircumstances are when you run everything through. So the decision, that's the computer that makes decisions. I don't want to get too technical, life, and everybody's going to be
It's perfect. The computers should make decisions.
Yeah, that's I actually, from our last discussion and when the computer didn't make the decision and it went to a person, that's where I had the 3-week delay in the closing and all of that. So in that aspect, I actually kind of agree with you. Just leave it to the computer.
Some other things on the below 600 too. So it would not, other programs that we normally use, like for instance, Iowa Finance Authority has a $2,500 grant for first-time home buyers. That's not eligible on when you get below 600. Just rural development opportunities, not really, still at the 600 level. So, it's a great program for a certain niche area. We just need to make, if there's any questions about whether a person would qualify or not, certainly would be happy to go through a free, no obligation review of where things are at.
Okay. Did you have any?
Yes, I do. For the down payment of 580 score, and they can use their own money, or they have to use their own money.
They have to. It can't be gifted. Right?
Okay.
It has to have to do their own
and how long do they have to have the money?
Well, we go back with our documentation at least 60 days worth of bank statements. So, and large deposits would have to be explained. There's just a paper trail process that needs to go through that. We normally do not go back longer than 60 days process unless an underwriter would ask for that, I suppose.
So it's called seasoned money.
Correct. Yes, it has to be seasoned.
Seasoned funds, as it
for
were.
2 months.
Yeah.
So that's not bad.
So. Yeah. Okay. And then on this, you've read through and you've done all the studies and everything. Is it me or is this an FHA conventional loan?
Well,
I'm just saying.
Yeah, that's certainly an interesting way of putting it.
I'm not putting you on the spot. I'm looking at the guidelines.
Yeah, no, it certainly has some very striking similarities. I'll certainly give you that. I don't. I just don't know. I just don't know. It certainly looks like that. Is it the old walks like a duck, talks like a duck, gets a duck?
Yeah. Okay. And I know we wanted to talk about interest rates.
Yes.
So because when we were talking yesterday, we were talking about the differences and stuff, right? Mm-hmm. Okay. So, what if you're going down in credit score? are we looking at the interest rates then going up as a compensation?
Correct, right. I mean, you would certainly see some risk-based pricing, what we call risk-based pricing adjusters added to the offered interest rate because of the less than 600 credit score.
Okay.
So, I mean, it could have an effect in the rate as much as 1%, perhaps. We would just have to run the scenario to make, just to see where everything plays out. Because it's not only going to be based on credit score, it's going to be based on loan amount. It's going to be based on, I guess those are the two main factors. How much, because lower loan amounts have loan level pricing adjusters as well, making it a little bit more expensive on the lower loan amounts than the higher loan amounts.
Is there, and you said up to 1% maybe?
Correct.
From the 600
below. So, I mean, you might see.
Is there risk pricing on the over 600, like 6 to 620?
There is a part of that. It's not really necessarily in the rate. It's more in the price, and that's not trying to be too technical here. But each rate that's offered by the market for the day has a certain price associated with it. So the price, each rate that's offered by the market for the day has a certain price associated with it, and that price adjusts every day.
Or more.
So just more than once a day, sure. But with the risk-based pricing adjusters, then that's added to the price, which buyers can compensate for that by having a little extra money to buy down the rate to compensate for that. I mean, I don't want to get too technical here, but I mean, there's a lot of different avenues that one could go to try to make sure that they get the best rate possible, considering the pricing adjusters that are added to the rate.
Okay. So let's do a little summary. We can go down to 500 on a credit score.
Yes.
We then increase the down payment accordingly.
Yes.
Interest rate have some adjustment on that, and that's factored on pricing, on the price of the loan.
And the loan amount.
Correct. So those things can be adjusted. A little bit different ratios, although on the accept ratio, it's actually pretty good ratios.
Correct.
31 and 43 are higher than most conventional ratios.
And again, it's not at a 500, just like any transaction or any opportunity to buy. It still goes through the eyes of the underwriter. There's still a process to be involved. So just because you have a 500 credit score, just like when you have a 600 credit score, doesn't necessarily guarantee an approval.
Or a 700,
Yeah,
or an 800, like I found out last week. It's pretty amazing. Okay, well, I'll tell you what. I think we'll take a little short break here and kind of reorganize our thoughts and get some other questions together. And we'll be back in just a minute. Stick with us.
Yikes, when it comes to getting your carpet clean, don't just pick another name from the phone book. Call the company you already know and trust. From Springer Pest Solutions and Springer Handyman comes Springer Carpet Cleaning. Springer uses the best equipment available. No one can clean your carpet better. And with Springer, there's no hidden fees and no add-ons. Springer cleans your entire house the right way. We even return for spot cleaning throughout the year. Stick with the name you know and trust. Call Springer Carpet today.
From the RE/MAX Real Estate Concept Studios. Listen, watch, chat. This is Webcast 1 Live. Programs on webcast1live.com are brought to you in part by KDC Builders. Building custom homes for how you live. KDC will take your dreams and turn them into reality. Go to our website, kdcbuilt.com. or call Hannah Inman at 515-975-9990. And Tom Coates and ConsumerCreditOfAmerica.com. Are you overwhelmed with mounted credit card debt and feel there's no way out? Well, there is. Call 1-800-955-5765 for Consumer Credit of America. That's ccofamerica.com.
Hey, welcome back. Thanks for streaming along with us here at Webcast One Live. As you know, if you're watching us live, webcastonelive.com is where we're at. And we're on here every Friday afternoon from 1:30 to 2:30. So it is me, Lance Hansen. Alma Skaljak is here, and we are Real Estate with RE/MAX. And we just want to get the information out there of things that are going on. And we've been talking about, before I go on, make sure that you write down those phone numbers of our sponsors out there, because they are very important to us, because that's how we get here, you know. So On the Spot is out there as one of our sponsors. You want to call them if you need any of that. Have you ever seen some of the stuff they have on, you know, the Facebook, where they've got like water damage and crud everywhere, and you know, they're in like these space suits. They have to go in and cut all this stuff out and mold and stuff, and they make it all like brand new. I mean, it's unbelievable, you know. And then of course Springer, who we had Eric down here and had a nice visit with him. Eric Professional Home Services. It's Springer Professional Home Services, and they do a little of everything. We went through last week and talked about all the things they do and all the specials they have, and you know, it's like I'm not going to work on my house anymore. I'm just calling Springer, going, here's what I need, take care of it.
Here's
you know?
my honeydew list.
Yeah, pretty much. I'm like, Donna, write everything down that you want me to do, and then I take it and go, okay, fax it in. And it's done, right? I think that's a perfect.
It's the only way it would get done with you. Yeah.
You think I'm a procrastinator?
Not at all.
Okay. I've been meaning to work on that. But anyway. Oh, I'm sorry. Anyway, Steve Schraderbacher from Wells Fargo Home Mortgage is our guest today. And it's like a weird Friday. I noticed that it was like this monster full moon last night. I mean, it was just huge.
Yeah, I did see that.
You know, so I think it's got like the wavelengths are all off or something, you know, like something's weird. I don't know. But it was a gorgeous full moon. I actually called my grandkids and said, go look out the window because there's a full moon tonight.
Really?
Yeah, because I think that's really cool. But anyway, some of the things that, you know, I wanted to talk about this just a little bit, and I'm going to insert this a little. Let's see if I can get. Okay, Esme, hang with me now. Here's a little camera shot for you, if you can get in there. This is last year and this year. In one of these days, Esme, I'm going to email this to you so you can just bring it up on screen just for the heck of it. But it's more fun to see you work in there. The blue line is actually 2009, and then all year long we've been running along with this red line that we've shown you what 2010 was, and what you're seeing is what government control of financing does. In the blue line, we had a tax credit that went all the way through, and then we thought we were going to lose it in November, and then they changed it, and it came back on again. And then in the spring of 2010, you can see what that tax credit did. It rolled it way up to the big high point in there. And then as soon as it shut off, you see what happened over the next couple of months. The sales fell all the way down and then flatlined, and of course fell off at the holidays. So that's how much control, thank you, Esme, that's how much control government programs have on our market. And we really are just finding out what a market without all this government influence is going to be like.
Right. But isn't it interesting? And I find that interesting because if you look at the end of the year there, I mean, they pretty much ended up about the same year over year. And again, there wasn't that government control, but it was just kind of interesting there how, you know, when the regular market is in play by itself without any extra control, things still end up about the same.
Yeah, absolutely. It's just an interesting thing, and I don't know. One of the things, and Alma's probably getting tired of hearing me harp on it, because I do like every week, but we're still fighting this mortgage insurance deduction thing.
Oh, yes.
Our government has said that would be a great way to make a bunch of money, is to not allow the people who own homes to take the mortgage interest as a tax deduction. In fact, I was reading a deal yesterday on it, and they actually have an app for your iPhone that you can calculate how much impact the MID has on you personally, with how much interest you pay and everything, and
based on your
put
tax rate.
information in.
Really?
And there's actually an
Interesting.
iPhone app that you can do that says this is how much effect would it have on you or somebody else if you put their information in. But it's just huge. And I did see that there at least as a proposed bill, I don't know if it's a bill yet, they've at least trying to get a bill in the system, a bipartisan bill that says that they're not going to touch MID. They want to make a bill that actually pulls that out of any of the discussions of getting rid of that. And that's one of the things, and my whole point coming full circle is that if you see these are the things that government can do to the market. Mm-hmm. And one of the things that if they shut the mortgage insurance deduction off, we will have another downturn. It will go down, and you'll see it, right? Okay, end of mortgage insurance deduction, boom, and it'll go down because it will start making renting and owning that much closer of a deal. Mm-hmm. And so government control, we're under the government spell. Yeah. So that was some of the things I want to talk about anyway, because I think that's a huge thing. So back to visiting about changing these things. Uh-huh. And we have a specific one where FHA is lowered the required credit scores. They've at least offered the opportunity that with a lower credit score you can go in and still try to find financing. And there was no direct, like, we're trying to benefit this group or that group or anything like that. But during the break we were talking about that it would have an effect on some people that are under that 600 credit score and basically had been shut off completely to the point where they're like, we want to buy a house, but really the only way to do it is to buy a home on contract.
Right.
Find a seller that's willing to do that, or an investor who, we have a couple people in town who will like buy a home and fix it up and then offer it on contract as part of an investment pool.
Sure.
And that's the only alternative that those people have had. I'm really not aware of any other loans that go below 600. Right. I don't know. Are you? Is there? I mean, even
we
if
used
it's
to certainly talk about what happened in the past.
Oh,
That's
yeah.
how we got to where we are, I guess.
Yeah.
Too, but
the past is the past.
That's right. And
Yeah.
we'll leave it there, I think.
Yeah, most times.
But I know a lot of the other ancillary lenders will be at high scores above 600 too. So
yes, there's lenders out there now that FHA minimums are 620 or even 640 that we've had on the show or talked to. That they've just made that conscious decision to raise those levels. It's interesting that, Wells Fargo is huge.
yes,
But there are other huge lenders out there, and I have not heard one peep from anybody.
well, and I think it really goes back to the Wells Fargo corporate philosophy of really trying to help the homeowner. And certainly we are very large. We have a lot of I guess 1 in 3, maybe it's 1 in 4, possibly maybe 1 in 3 homes in America. If they have a mortgage, it's with Wells Fargo. So
Really?
yeah.
Oh.
at least 1 in 4. So it just
So that, and that does speak, because we talked a little bit during break. I mean, sometimes, you hear Wells Fargo and they're just getting bad-mouthed, And I think the reality is that when it's like a builder, if you build 100 homes, somebody is going to be unhappy. I mean, it's just not going to work out. Something's going to go wrong. It may not be the builder's fault. You never know. Or somebody's just going to be difficult, and they'll be like, well, I would never build with them again, or. And I think that happens sometimes with Wells Fargo, is because you are that big that you're going to have more exposure by trying to give loans to people. So I guess my thought is that give Wells Fargo a little slack. I mean, you guys do a great job in virtually every situation that I know of.
And we're trying to we're active in the community with home preservation workshops. We're active in the realtor community with helping realtors build their business through workshops that we offer. I mean, we really want to make homeownership is a priority for our organization. So we want to certainly try to do what we can to promote that as much as possible.
Mm-hmm. Well, and I think you guys do a great job.
Well, thank you.
And you offer things and offer services, and this is certainly one of them. And I can see that there's a group of people that should be able to take advantage of this, and maybe have that opportunity to have a home where they might not have before. Even with 10% down, I mean, if you're buying on contract, that would be like a minimum.
Sure.
A 10% down would be a minimum amount, because when you're buying the house, the costs have to be paid up front, things have to happen, that stuff. So that's still 10% down, still a pretty good deal.
Yeah,
I'm sure the rates are going to be a little bit better
than contract
than you would on a contract. Right. I mean, the investors there, they may be looking at 8%.
So if you get a rate at 6 or 6.25 on a contract or on a below 600 situation, I mean, that's a tremendous opportunity.
And
for
you're
the
also
buyer.
in the majority of contracts are done on like 5-year balloons, those things where they buy the house on contract, but it only goes for a period of time, and then you have to, it's like a short-term fix almost, where it's okay, get your credit back together, and then traditional finance and buy the contract out and go on.
Right.
So there's not a lot of contracts that are for over 5 years.
Right, because then you'll have to figure out what you got to do at the end of the term.
Mm-hmm. Yeah. So I think that offers a great niche. Going through with that, then, let's talk about 2011.
Okay.
Because I know you're a not procrastinator, prognosticator, right? That's where you was getting me confused.
Yeah. I couldn't say the word.
Yeah, me either.
Yeah.
But going into this year, what do you see as some things that you just really feel are going to change?
Well, I mean, I certainly we all in the lending institutions thought that rates were going to go up last year. That didn't happen. I mean, it didn't happen to the extent that we thought it would. Certainly, I think this year we will see the rates go up more. Right now we're quoting purchase rates as low as 4.75 on a 30-year fixed. So, I mean, that's still a tremendous opportunity. But to see rates at 5.25, 5.5, maybe 5.75 by the end of the year, I don't think that would be out of the realm of possibility. I think that the opportunities much more. There won't be quite as many opportunities for mortgage. We're trying to make more opportunities, but I just think that the total volume will be less. But certainly, we're still going to be getting things done. I don't really, as long as we have the proper documentation and have everything verified and the borrower does, earn the money to qualify for the property, I don't really see any big hiccups there. A lot of rural development's back. We're doing I've been fortunate enough to do a lot of rural development loans.
Talk about rural development just a little bit.
Sure.
Because I think some people don't quite understand what that means.
Okay. So certainly the city of Des Moines really wouldn't qualify as a rural development area, but I mean, in the outlying areas, we look at Polk City, Bondurant, Mitchellville, Norwalk, Indianola, Winterset, all the surrounding areas around the metro, or majority of them, potentially could qualify for rural development financing. And what that is that's financing that's offered through the U.S. Department of Agriculture, USDA, 100% financing, so no down payment, again, 600 credit score minimum, but no down payment, no mortgage insurance, so no monthly mortgage insurance is part of the monthly payment. There is a 3.5% funding fee or rural development guarantee fee that's actually financed into the loan, so it does make the payment higher because the loan amount's higher, but again, it's 100% financing. So
and without mortgage insurance,
right.
I mean,
and there's income limits, and again, the property has to be in a certain area, and we have the rural development USDA website has a link that allows us to check the address to verify if it's eligible for the property or for the program before we even begin to look at the loan process, so then we can see if it qualifies or not.
Okay. And that income limit, is it 80% median income?
80%.
Is that the kind of standard form
Correct.
that's out
80%
there?
of the adjusted, I think they call it the AMI, the adjusted median income. It's like 46,000 in Polk County, I believe it is, family.
And is that family
household? Right.
But I mean, is it broke by family, like 2 kids, 3 kids, 4 kids?
Correct. Right. So the more kids, more folks that are in the household, the higher the income.
So you just have more kids, you can buy a nicer house.
Well, you got to have more bedrooms, I guess.
So. Yeah, bunk them up. Shoot, get back to the old days. Just get 2 sets of bunk beds. You got room for 4.
Just don't call the fire chief.
Well, as long as it's got an egress window, shoot, that works. You just can't stuff them in the basement anymore, like I grew up. Locked in the basement. In fact, they had an exterior lock on the basement door when I was little. So anyway, back to 2011 though.
Yes.
I'd like to take that little break out into rural development, but it's been my opinion for a period of time that the 2011 is going to be that year, and I think this FHA might signal the beginning of that, where over the last 5 or so years, all of the major lenders, investors, underwriters have amassed this huge amount of data of who the people were, what kind of loan it was, how long did it take to default, what was the down payment, what were the rates, all of the loan package information is all being amassed into this. And it's my opinion, and of course you get what you pay for, but it's my opinion that 2011 will be the beginning of them looking back and saying, where have we tightened up too much? What areas have we said, no, we're not doing that anymore? But when we look back and really look through that data, we find that we really didn't have issues with that set of circumstances. And I think what we'll have is we'll see little bumps out of that circle they've squeezed us down into, like this FHA, where they say, we could go out and reach out to just that group of people given this set of circumstances. And I think, like you alluded to, is that the lenders / investors, that's what they do for a living, and to just sit there with your little gathering of guidelines and keep them all packed into this little ball and go broke doesn't make any sense to me. I think there's got to be people in there looking, going, where can I find an area that makes sense that we can open up and loan money back into again? Any thoughts on that?
No, I think that's certainly very valid, and again, it goes to the idea of having more skin in the game, and really having the additional money, and certainly if someone had a score below 600, maybe it's a situation where it happened as we talked about at the beginning, they were really trying to work to get things back up, but it was something that happened 3 or 4 years ago, and they just haven't had a chance to get it back above that 600 mark, but they still want to take advantage of an opportunity for a piece of the American dream, to have home ownership. So, this certainly gives them an extra option, to look at that possibility where we just didn't have that before.
Okay.
So.
Well, we're going to take another little break here and then come back and we'll go into that a little bit more. Just, okay, like I said, a little prognostication of where we might be headed. So let's just take a few minutes, enjoy some of our sponsors out there, write down their phone numbers and give them a call. We'll be back in a minute.
Yikes, when it comes to getting your carpet clean, don't just pick another name from the phone book. Call the company you already know and trust. From Springer Pest Solutions and Springer Handyman comes Springer Carpet Cleaning. Springer uses the best equipment available. No one can clean your carpet better. And with Springer, there's no hidden fees and no add-ons. Springer cleans your entire house the right way. We even return for spot cleaning throughout the year. Stick with the name you know and trust. Call Springer Carpet today.
From the RE/MAX Real Estate Concept Studios. Listen, watch, chat. This is Webcast 1 Live. Programs on webcast1live.com are brought to you in part by KDC Builders. Building custom homes for how you live. KDC will take your dreams and turn them into reality. Go to our website, kdcbuilt.com, or call Hannah Inman at 515-975-9990. And Tom Coates and ConsumerCreditOfAmerica.com. Are you overwhelmed with mounted credit card debt and feel there's no way out? Well, there is. Call 1-800-955-5765 for Consumer Credit of America. That's ccofamerica.com.
Hey, welcome back. We're just, like I said, it's a full moon out. So, yeah, it's kind of crazy in here. But we're having a good time. Our guest, Steve Schroederbacher, is with Wells Fargo Home Mortgage, and it always brings down, he's a searcher, I guess. You like to look out at things and get into things and read and try to see where things are going. And so I'm trying to dig some of the stuff out of him, try to get him to make some predictions.
Oh,
just to see, because then towards the end of the year, have you back down and go, oh man, Steve, wow, missed it. No. So anyway, let's talk just a little bit more about, some of those things that might happen through this year. Do you see, it's predicted that this may be the single largest foreclosure year, that's on records. And I guess I haven't read enough in there to know, does it mean they're going to actually foreclose and then turn those into the marketplace? Or is it the amount that are already foreclosed and the people have held back?
I think it's both, truthfully.
Really?
I think it's the ones that have held back that are coming on, plus the ones that have already been through the process, that are still out there and waiting for a new owner.
And somewhere I was also reading yesterday, and they said that that it's kind of Obama's kind of new direction that's come here in like the last 6 months or so, even where I think he believes that if we just put them all out there, just put all the houses out there, let the market do whatever it's going to do, and just get the pain over with, just done, and see what happens. So
well, and I think certainly buyers are after the best opportunity for their money, which I certainly can appreciate. And and sellers are after the best opportunity for their money, which, sometimes goes in different directions.
Yeah.
But
Most times,
most times. But I think that we'll continue, as you said. I think we'll continue to see more foreclosures on the market. We'll continue to see this shadow inventory situation continue to grow. And I just think that if someone's in the market to buy, waiting. If someone's in the near-term market to buy, I think waiting, doing it now versus doing it 6 months from now, you'll probably see a significant difference in cost, in rate, in just opportunities that are available.
And I think that's the point that I think sometimes people just don't quite grasp. And we've talked about it in a bunch of different ways on the show over the last year or so, that the interest rate is so impactful on your loan payment.
Right.
Much more impactful than a few $1,000s on your price, one way or the other. It really does make a huge difference where $2,000 or $3,000 in pricing, up or down, doesn't have near the impact of even a quarter or even 0.5% of rate difference. And so that, I want to wait until the bottom of the market to where, housing is devalued to the lowest point it can be. The only way for me that makes sense is if you're a cash buyer. I mean, if you've got cash money sitting there and you're like, I'm going to wait, another 6 months because I think we're going to have a little bit more price reduction going on. Okay. That makes sense. But if you're financing it, if you're borrowing the money to allow the rates to go up, which more than offsets any lowering of pricing, it's like, get started now.
Well, right, yeah. I mean, I think the opportunity is now, and certainly, obviously we're in the mix on a day-to-day basis, and I try to really work hard when I'm talking to the folks about it. I mean, it's not just me saying it. I mean, there are others in the market that are saying now is the time to buy.
It really has turned. I mean, in all the different publications that I get all these daily emails of different experts,
Sure.
in the field, and they literally in the last couple of months have all turned to stop waiting, buy now, get out there and do it. If you're going to do it, do it. And now it's even gone to the investor newsletters. That's like, now is the time. If you're an investor and you're interested in getting into the market, now is the time to do it. Go out there, get involved, buy homes.
Well, and you've probably seen both of you probably seen a significant increase in cash buyers. I mean, that have money that are wanting to invest.
Yeah, I personally have, and I know most of her buyers are cash. That she just knows people. She knows people that know people.
But I mean, that's what I'm hearing as I'm out talking to the realtor community is that they're seeing a significant amount of people that are in a situation where they can buy the home and they have the cash to do so, or mom and dad. I just talked to an agent today that he said, Mom and Dad, we're going to take care of it. And I said, well, that's great.
Boy, isn't that nice?
I mean, it doesn't happen a lot, but it happens on occasion. Certainly,
everybody needs a mom and dad.
I know.
Everybody needs a mom and dad like that. Yeah, just where he's like, oh, what do you want?
Oh,
there you go.
That's right.
So
well, I mean, I realize that doesn't happen all the time, but it just seems that it'd be interesting to see at the end of 2011 if you kept a transaction or a tally of the number of cash buyers in the Des Moines Metro versus 2010.
I bet I know somebody who knows that info.
Yeah, I probably do. So
I'll bet. We'll just have to ask him. And he's promised me that because he's the new president of the Des Moines Area Association. And so he has promised me that he'll be on the show. And we're talking Les Solgrove, who does all these stats and things for us and makes them available. And he's going to come down and visit, about that, about the association and the directions we're going and what he sees out there. But that won't be till February because he seems to think that being a new president and
something about
Is
a
more
party
important
that's coming up or
than coming here.
some banquet or something.
So I think you're going to have to talk to him, and
Yeah.
get him down here. Just call him up and say, we
Next
need
week.
You. Uh-huh.
Okay.
Next week? Yeah, there you go. So anyway, Steve, it's always awesome to have you on.
Thanks.
And it's nice to have you come down and share with us the information, the 500 credit score. And that sounds, it wasn't that long ago when 500 was like, oh, yeah, we can work with that. 520.
Well, yeah, and I guess it just depends. Certainly depending on what the situation is. If we have a proper paper trail, we have an explanation of what the circumstances were that caused the situation. I mean, obviously we have the credit report, but it might have been some extenuating circumstances that the credit report can't tell us. If we can paint we as loan officers, if we can paint the proper picture for an underwriter, it makes the process that much easier, even at the 500 credit score.
Did they go through and do? Like on the underwriters, they actually hear the story.
Well,
is there some of that?
Below 600, we don't have the automated underwriting opportunity, so it is a manual underwrite.
Oh,
so
okay.
there are going to be really digging into things. Now, certainly at the 600 or higher, there's the automatic underwrite potentially, or the accept level that says, well, based on the conditions that are submitted here,
okay,
everything looks to be in order and we should be able to proceed. Now, certainly underwriter still looks at that, but when you get below 600, then it requires a manual underwriting review automatically.
So they actually, you might even get to do the old time where you used to write a explanation letter and a cover letter to the loan and all these things that go.
I would call loan scenarios
loan scenarios.
Loan scenarios.
Hey, loan scenario. I like
So,
it.
but another thing too is, for the realtors that are listening, if you're looking at clients below 600, pre-approvals are not available, like automatic pre-approvals, because they don't do the automatic. It requires an underwriting review, so we can still do pre-approvals, but just understand it's not going to be a situation where we're going to be able to turn that in a day or something. It'll take a little bit.
So I can't just text you.
No, that's not going to work. I wanted to make sure I got the disclaimer just to understand that it's going to push out a
Not
little
for
bit.
anybody specifically, but maybe. Okay. Well, give us some contact information.
Sure.
'Cause I'm sure people are going to want to know about, how they get hold of you.
You bet. My website is mortgageloansbysteve.com. That gives you all my website contact information there. Phone number 515-289-4381 is my office, and cell phone is 515-360-5197.
Okay. And that should cover it.
Yeah, pretty much.
So
or you can text too if you like to text.
Yeah. So if you have anything, any of the questions about that, we'll give Steve a call, and he'll take care of you on that. And Alma, what do you think? We made it through the full moon day, right? I think that's the big key right here. So we're going to take off. So we will join you next week on Friday from 1:30 to 2:30. Again, I'm Lance Hansen, Alma Skaljic. This is Real Estate with RE/MAX, and we'll see you next week. Thanks for tuning in.
From the RE/MAX Real Estate Concept Studios. Listen, watch, chat. This is Webcast 1 Live. Programs on webcast1live.com are brought to you in part by KDC Builders. Building custom homes for how you live. KDC will take your dreams and turn them into reality. Go to our website, kdcbuilt.com, or call Hannah Inman at 515-975-9990. And Tom Coates and ConsumerCreditOfAmerica.com. Are you overwhelmed with mounted credit card debt and feel there's no way out? Well, there is. Call 1-800-955-5765 for Consumer Credit of America. That's ccofamerica.com.